Hey everyone, welcome back to Stocks Telegraph, your go-to place for the latest market insights and stock updates. If you're new here, hit that subscribe button and don't forget to turn on notifications so you never miss out on our latest stock analysis. We've got a lot of exciting updates for you today. So, in this video, we're diving into Plug Power Incorporated, ticker symbol PLUG, a company that's quickly becoming a big player in the clean energy space. Specifically, we're looking at how they're advancing in the hydrogen fuel cell industry. With cutting-edge technology and strong partnerships, Plug Power is on the rise, and their role in the green energy revolution is becoming clearer by the day. We'll be breaking down Plug Power's latest financial performance, their market potential, and what investors should know about the future of the company. But before we jump into the details, don't forget to hit that like button and share this video with anyone who's into stocks or clean energy. We'd love to hear your thoughts on Plug Power and its future, so drop a comment below. Now, let's get into it. First things first, let's talk about Plug Power's market position. As we know, Plug Power is one of the major players in the hydrogen fuel cell space, and they're pushing to lead the charge in the clean energy sector. This company is all about providing alternative green energy solutions, particularly in industries like material handling, energy production, and even transportation. With that in mind, let's take a closer look at the numbers and see how Plug Power is performing. Right now, Plug Power is trading at around $2.56 per share, which is just below its analyst's mean target price of $2.73. The stock holds a mean recommendation of 2.75. That's just under a buy rating. Analysts seem cautiously optimistic about its growth, but with a fair amount of room for improvement. Looking at its recent quarterly performance, Plug Power has made some solid strides. Over the past quarter, the stock rose by 28%, and in the last month alone, it's up by 33%. Not bad at all, right? But here's the thing, it's still 50.19% away from its 52-week high, which suggests there could be some upside if things continue to go well for the company. Plug Power has also seen impressive growth in its earnings. The company reported a 46.39% growth in earnings per share this year, with analysts expecting another 49.56% growth next year. They also saw a 47.98% increase in quarterly earnings year over year. On top of that, Plug is trading 17.58% above its 50-day simple moving average, signaling some positive short-term momentum. So, while there's potential for growth, the stock also has its volatility, especially with that distance from the 52-week high. It's one of those situations where there's upside potential, but it could be a bit bumpy along the way. Let's take a deeper dive into the numbers for third quarter 2024. Plug Power reported a revenue of $173.7 million, which is a big jump driven by increased electrolyzer deployments and an expanding hydrogen network. Plug Power also leveraged its growing manufacturing footprint, which has helped improve its financial position. Comparing that to the previous quarter, revenue grew by 31%, showing some impressive operational gains. However, overall revenue was down by 37% quarter over quarter. But the good news is that Plug's revenue streams are becoming more diversified. They saw a 42% boost in equipment revenue, a massive 776% surge in service revenue, a 13% increase in power purchase agreements, and a 9% boost in fuel revenue. While the decrease in overall revenue quarter over quarter isn't great, the fact that Plug Power is diversifying across different areas is a good sign. It suggests that the company is building a more stable business model that can weather market fluctuations. Now, onto the earnings side of things. Plug Power posted an EPS loss of $0.25 in third quarter 2024, but that's actually an improvement compared to a $0.36 loss in second quarter. So they're getting closer to turning that corner. However, it's still a loss, and it's important to keep an eye on how these numbers evolve moving forward. The net loss for third quarter 2024 came in at $211.2 million, which is smaller than the $262.3 million loss in second quarter. That decrease in losses was mainly due to strategic investments, new product deployments, and the market dynamics at play. But don't forget that $70.5 million of that loss came from non-cash charges like depreciation, stock-based compensation, and impairments. These charges are reflective of the company's long-term growth strategies, So while they contribute to the loss on paper, they're part of Plug Power's broader expansion plan. Looking ahead, Plug Power is expecting 2024 revenues to come in between $700 million and $800 million, which is quite promising, especially with a strong pipeline of orders in areas like electrolyzers, cryogenic, and material handling. They're optimistic about the second half of 2024, anticipating that these orders will significantly drive up revenue. The company is still facing challenges with the development of the hydrogen economy, but they remain confident that their investments will pay off as the sector matures. This should give investors some comfort, knowing that while progress may be slow, Plug Power's position is strengthening. Plug Power's future plans are looking pretty exciting. For example, they're making major strides in hydrogen production with a new joint venture plant in Louisiana in partnership with Olin Corporation. The plant is set to ramp up liquid hydrogen production in first quarter 2025, a huge milestone for Plug Power. They've also installed an 8-megawatt hydrogen fuel cell system, hybrid microgrid in California, designed to help power during emergencies and wildfires. This reflects their commitment to creating sustainable, resilient energy solutions, and it's a strong signal of their growing role in the industry. On top of that, Plug Power just secured a $10 million grant from the Department of Energy to develop advanced hydrogen refueling stations in Washington state. This is a clear sign of the company's leadership in the hydrogen ecosystem and its ability to secure funding to fuel future growth. Looking ahead, Plug Power has some ambitious plans. They recently shared a roadmap for the next 5 to 6 years at their 2024 Plug Symposium. They forecast revenue to grow to between $850 million and $950 million next year and expect to hit $3.75 billion in annual sales by 2030. That's a major increase, and it's expected to be driven by both hydrogen fuel production and fuel cell sales. The company is also projecting a 30% annual growth in sales, with profit margins improving as they scale. So, while they're not expected to be profitable in the short term, the company's trajectory looks promising, with rapid profit growth projected once they hit economies of scale. So, what does all this mean for investors? Plug Power is still a bit of a risky stock, especially with its delayed profitability timeline. But the long-term growth potential is there, and analysts are confident that the company can hit $3 billion in revenue by 2030. As they scale and refine their operations, the upside could be massive, but that depends on how well they execute their ambitious plans. If you found this analysis useful, don't forget to like the video, share it, and subscribe to Stocks Telegraph for more in-depth stock analysis and market updates. Also, leave a comment. We want to hear your thoughts on Plug Power and its future. Will they execute their growth plans? Let us know in the comments below. Thanks for watching, and we'll see you in the next video.